Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, and what a recap it is. If everybody doesn't have your seatbelt on, you might want to put it on, because regardless of the market, not just metals, it's a fast and volatile ride. So Miles, obviously Fed announcement here today, but we've seen a lot of volatility just from the last show. We were called out by some listeners because we published Thursday, though we recorded Wednesday. And immediately the prices almost became obsolete last week on the price drop through your support level. So why don't we start there with gold and just kind of recapping what failed last week and where we are now.
So we've been in this short-term trading range ever since we broke into and then down below that kind of long-term trading range, sitting around 1685-ish, which we've come into a couple times over the last few years. And Rob and I got on the show here recently, and we did talk about the possibility, if not probability, of pushing down to lower levels, and we looked at some of those potential lower points. So now that we've pushed down into that, what's the likelihood of us actually going down to see them? So since we're on the way, what's the likelihood of hitting the destination? So short term here, we've seen a trading range in between about 1653, which we initially put in back on September 16th, and then we did hit again today immediately following the Fed announcement, the 3/4 point rate rise. And the top end of that would be kind of where we had that break point, which did push us below that long-term trend line. So I'd put a top end here on 1690, which you can see this range on the chart. Now, what we had happen today, I would argue actually looks relatively reversal-esque, in that we came down and hit about 1653 intraday, immediately turned around and spiked back up to 1690. So as you mentioned, just like last week's show, this show's going on the air tomorrow. So we'll see where the market ends up closing after we finish talking here on Wednesday and where it opens Thursday before we get the show out. But I would argue if we see gold holding in the high 1600s, let's say 1675, 1680, and potentially pushing a little bit higher tomorrow, the action we saw today was very strong bullish. Now, strong bullish how? How much? Let's say we do turn bullish, at least short term. That doesn't mean that the 1560 number Rob and I talked about isn't still possible, but I do think it's reasonable to see a reversal here in gold. So there's your short-term pricing range between about 1650 and 1690. So I would argue your intermediate term range would be actually on the reversal back up. So where in gold could we see some resistance to the upside? And I'd say your first target is a little over 1800, maybe around 1810. That's your 382 fib on the way down since the last time we hit just shy of 2100 back in March. So your medium term range in gold is going to be on the reversal side back up, and you're going to see resistance, people trying to push the price back down. So gold's going to need to get back up into the low 1800s. I'd then put us around 1860 and then over 1900. I would say those are your medium-term stair steps if we're going to continue up. Now, if we do continue down from here, even if we go up to one of those prices and then continue pushing down in the gold price, there's really nothing between here and 1560. So you're going to see a lot of noise, a lot of up and down, but ultimately if gold continues down, I think we've got about another $100 down, and that's where I'd be looking at opportunities to add to my position there. So on the upside, I'm looking to break through these levels. I'm a buyer at 1810, I'm a buyer at 1850, I'm a buyer at 1900. But on the downside, I'm waiting till we get to 1560, because that's a big difference. 1800 and 1560 is a big range, and I don't mind paying a little bit more if I know it's on the way up, and I don't mind buying occasionally on the way down as well.
Well, remember, too, we were watching that 1680-ish, 1685, really 1687 as sort of a key support to the downside in that previous channel that we were trading in. We had that extended sideways trading channel, and now that's exactly where we ended up, believe it or not, going up to really around 1689 on this little almost $40 pop today
right
after the Fed announcement. So you often say that the previous floor now serves as a new resistance to the upside, and we did see that play out. So I'm a little disappointed that it's gone back from about 1689 down to about 1674 as we record. I wish that it had stayed there and busted through, so I'm going to be a little more skeptical. But in terms of your outlook, I'm in agreement with you. There's just not a whole lot of support. And you have to think, nothing has changed the direction of any market. This is an expected rate hike by the Fed today, and recession numbers continue. Geopolitical strains are that go in the same direction. This is global. Energy prices continue to climb. Inflation continues to be a problem. And so until one of those things actually has a significant change, and we don't know what the impetus will be, we don't know what the stimulus for a change of direction will be, we're in the same direction. So why wouldn't we expect it to continue to come down here until things change? And silver is showing a little bit of surprise strength. Over the last week, really 2 weeks, we've seen the ratio jump up as high as 95 to 1, and now we're down to 85 to 1 because of silver's strength. Today, after the Fed announcement, it's up 1.4% to 1962, but it crossed $20 there for a bit on an intraday. So 2002 it hit, but it seems to be finding a floor here. Maybe that's mining supply restrictions. You know, there's a lot of silver availability as a result of a byproduct of zinc mining and refining and smelting, and that's being pinched. Energy prices are hitting mining sector as well. What do you see chart-wise for silver?
Well, you say it seems to be finding a floor, and that's kind of accurate because what we're actually doing is we're bumping along a trendline ceiling. We've had this declining bouncing pattern in silver since it was about $22 back in May. And while we've been doing that, we've had a 3 drives RSI divergence. We've got declining dollar price, while the relative strength indicator bottoms have been rising. You can see on the chart here. And now we're bumping right against that top end of that declining trend line. Generally, you hit a trend line, you expect things to turn around, right? You hit a trend line, you got a lot of sellers that are sitting there just waiting for it to hit the trend line so they can put in a sell position and maybe scalp a few bucks here and there. But in this case, we haven't had that. It's been kind of bouncing just under this trend line for the last few days. So with that RSI divergence, which usually means at least a short-term reversal, some type of corrective reversal, I actually would expect to see silver go up here over the next couple of weeks, despite the interest rate rise and the expectation that less free money in the market is going to negatively impact the market. And that's all markets. That's not just tech stocks. That's also durables and consumer goods and everything else. So despite that, and silver being more subject to market movement than, say, gold is, which is more of a independent hedge on its own, I actually do think we could see silver turn around and continue up right now, maybe as high as, I don't know if we'll get all the way back up to the 22, 23 mark, but that's certainly reasonable. So I'd keep an eye on silver going up at least a couple bucks here in the short term, and then see how it responds once it gets up to those prices.
Well, that's fascinating. I mean, if you're right there, then you've got silver going up and gold going down if your predictions play out that way. Well, look at what that does to the ratio. Now we're not at 85. We're shrinking down. Even if it just goes to 22, you're back down to the low 70s on the ratio. Right. So hopefully everybody listened to us a few weeks ago when we hit that 95. This is screaming buy silver. And sure enough, you're on the right side of the seesaw here where you ride that silver up. And two metals that have just been hanging flat, platinum and palladium. I'm obviously bullish on platinum over the long term, but I'm surprised that we haven't seen more price action just because the majority of that is mined in Russia and South Africa. And you're not seeing the geopolitical strains really impact the price, although palladium today had a huge swing of about $250 from the low to the high. But anything to point out to the listeners on platinum or palladium, or do you want to jump into the ever-exciting U.S. dollar index?
Not from a chart perspective, because like you said, it's been relatively stagnant for a pretty extended period of time, trailing down as expected. You know, a stagnant market tends to trail down because you lower prices looking for buyers. That's it. So, of course, long-term nothing equals slightly lower prices. Prices don't tend to upwards tiny amounts long-term. It's the opposite.
And in those white metals, we're not seeing the premiums like we are in silver.
Exactly.
Right? The demand's just not there.
Yeah, and I think that's the answer to your question. Geopolitically, you're not seeing a lot of increased supply because of Russian sanctions, where a large percentage of platinum and palladium, rhodium, iridium metals come from South Africa, and it makes up another large chunk of that as well. But you would assume the Russian sanctions are going to have a negative impact on availability. But we're also in a recession, so less stuff is getting made.
Another one of those directions that has yet to change. Well, same with the dollar. So you have said on this show that the dollar's got more upside room.
Yeah,
again,
showed
here
it again
we go.
Today.
111.3 as we record here, another high.
Still the safest asset on the planet. Love it or hate it, and I'm more on the hate the dollar camp, but let's be honest, still the safest asset on the planet.
That's exactly right. And that's going to have a global impact, not just domestic, but certainly that's such a major headwind for gold, which goes back to, again, the prediction of a continuation of this downtrend. But the equities aren't immune to that. I mean, all three indices right now are down over 1.7%.
Equities responded exactly as expected. I would argue gold did too.
Yeah.
It's just you had a lot of buy orders sitting down there.
Well, and they've started to separate.
That's the part that catches me.
I'm encouraged because gold is not following with the equities markets necessarily. So in 2008, on the major decline with the financial crisis, gold followed suit with the equities in that first few weeks, 3 to 4 weeks. Same thing in 2020 with COVID hitting, and gold follows suit. So did silver, obviously, almost twice the move down that what gold had. Well, we saw that here in 2022. Not just 2020, I meant COVID with 2020, but we've seen in 2022 where gold has retraced. Silver's more than doubled gold's retracement. So gold is down now 5% on the year. Whoopee. Silver's off about 15%. But they're stopping. Like, they're not down 1.7% with the equities as they were tracing earlier in the year.
Right. And everybody talks about gold being this perfect inflation hedge, which has been a central point of our conversations for years, because my argument has always been that gold isn't really a short-term inflation hedge. It's a phenomenal long-term inflation hedge if you let it sort of average itself out over time. But short-term, it doesn't always act exactly the way you think it would on, say, an FOMC raising interest rate 75 basis points day, like today was. Mm-hmm. The equities market did. The equities market did exactly today what people thought it probably would. But gold didn't. So I would actually argue, why is gold up today? It should technically be down, right?
Yeah, and it's
so
the
why is gold up? Yeah, exactly.
Goes back to your recession.
That's what gold is actually a perfect indicator of. You know, I've never done this, but I would actually like to at some point, maybe I'm saying it on the air so people can hold me to it. But I actually would like to go and do some relative research between, say, the VIX and gold.
Yeah.
And how gold has trended depending on VIX movements. And I know we bring up the VIX occasionally because we'll see trends in the VIX play out, which does lead to a more overall longer-term trend of instability, not just a day here, a day there responses, but the actual trend of instability over a 6-month period of time. So that would kind of be an interesting analysis, I think, that may be worth putting some time into, that we can either cut that out of the recording or not. Because if I say it out loud, and there'll be about 50 clients of mine that'll call up and be like, hey, when are you putting that VIX gold chart together? So I guess I'm holding myself to it now.
Well, unfortunately, the VIX has also been proven to be a little manipulated. We've got some criminal activity going on there. But let's come back around to the Fed for the sake of keeping the show going here. But the Fed, again, raising rates another 75 basis points. Key points really from Powell with him talking shelter concern is probably greatest, right? Shelter inflation. So rents and home prices, those sorts of things, they feel like are going to linger the most. You said
shelter inflation. My brain was picturing banks in the Cayman Islands, but you were talking about a very different thing.
Yeah. And then he says that inflation really has not come down. So despite these interest rate hikes, the most surprising thing to me is that he says no one knows if this will lead to a recession. Are you kidding me? You look at the last 20 plus times that they have raised rates as the Fed initiates rate hike campaigns. Every single time except 2 times it has resulted in a recession.
Well,
we're
it's
already
not.
In a recession.
The White House just redefined what a recession was a month ago.
Right. Yeah, thanks for that. And they don't know what the chances are of a soft landing. They feel like those chances are going to diminish as they pursue restoring this price stability. So they're admitting that a recession is not only possible but likely, And that soft landing is going to be really hard to dictate. And I don't think they can. But yet at the same time, they're going to remain restrictive all the way through 2025. They've come right out. Their target inflation is 2%.
We'll see.
And they think that it's going to take another 3 years. And 4.6% is their target endpoint on this round. And whether that happens in the middle or end of 2023, we're going to have to wait and see.
So here's an unfortunate reality about that. All that raising interest rates is going to change is consumer inflation. Because last time I checked, the government is still passing spending bills, and they don't care.
No, they don't care
what the interest rate is.
And
They
the
don't have
Federal
to pay
Reserve
it.
is supposed to be shrinking their balance sheet. But guess what? They're continuing to buy mortgage-backed securities and Treasury bills.
So it's going to be harder for you and me to borrow money.
Yeah.
We've got forced austerity in the private sector. Love to see if that takes place in the public sector.
Well, you're finally starting to see some of this have a ripple effect. You know, the U.S. dollar index being at 111 is a result of other central banks lagging in their rate hikes.
Yeah, where else do you go
But
with your
now
money?
they're-
China? Europe?
Well, you go to the bond market now. The 2-year just went to a 4.1%, highest since 2007. So you know what's going to happen. They're going to flee out of equities, and you're going to just go buy bonds.
Yeah, but the bond market still trusts the 2-year more than the 30-year.
Oh, yeah, for
and
sure.
I think that matters,
And
too.
it's still the biggest bubble that we've ever had. At some point when that thing pops, they lose all control of interest rates. But at least the European Central Bank's Lagarde is saying they're going to start hiking. Sweden's Riksbank shocked everyone yesterday with a 100 basis point hike. And that's going to help that dollar index stay in check and maybe not go to 120 and reverse a little bit sooner. That on top of the geopolitical strains with Putin saying, look, I'm not bluffing. We've got the UN meetings going right now, the looks between China and the U.S. China's obviously upset with our Taiwan support and President Biden
Yeah, the White
saying,
House backed that out real quick.
yeah, well, I don't.
So-
I think we showed our cards, and
That
they don't
was-
believe the back out. I think
That
they
might be
believe
my
the-
favorite political moment of the year.
Well, it could
Like,
pay off.
No, Joe. No.
Yeah,
It's just
well,
30 minutes later, the White House goes, no, he didn't really mean that.
Let's hope it doesn't play out to be a pivotal point in world history. But keep your eyes again on recession numbers. This is still all about global recession, depression, as it links to inflation. With the German PPI at an all-time high of 46%, you talk about inflationary pressures, 46%, just up 7.9% in August alone. And now they're nationalizing Uniper, the gas producer, to keep it from failing. They're nationalizing their natural gas producer. Japan hits 8-year high in inflation. Their energy prices are up 139% year over year. Global shipping is down 50% year over year. This is ugly, folks. And unfortunately, what happens when it becomes this widespread and tensions build this much and the populace and citizenry gets that annoyed or distrusting or unsettled, cold,
freezing,
cold, yes,
hungry,
broke, right? Well, that's when war cycles happen, where you see major political shifts turn into geopolitical shifts. And we've got a lot to see play out here. But I'm telling you, you buy gold, it's private, and you buy all the way down till we hit that low. Because if you're looking for that hedge, Miles, as you pointed out, over that long term against the inflation, it works best when you buy it low.
Has Germany ever nationalized private corporations before? I can't remember, and I wonder how that turned out.
I'm going to skip right over that. Let's wrap this up.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, do the YouTube things you've been doing for 20 years. I guess we don't have to describe them anymore. But what you haven't been doing for 20 years is giving us a call, because we can be reached at 800-525-9556. You can also stop by our website at McIlvaneyICA.com. You can find us on Twitter at ICA Gold or Facebook at McIlvaney Financial.
Thanks again for listening. Have a great week.